would be your message? Because you are one of the largest asset management company when it comes to alternates,
Yeah.
both AIF and PMSS. What would be your message? Should the investor try top up their existing investment, because most of them are down to the tune of from 5% to 10%?
Yeah.
What's your views on that?
No, the view is very clear. I mean, if your long-term view about India is positive, if your expectation about growth of India's economy, which we are all talking about, doubling and tripling and quadrupling in the next 15, 20 odd years, then one has to have a long-term horizon to create a lot of wealth. Now, while your horizon can be long-term, you should always look out for opportunities where you can enter at lower valuations or when markets are correcting. Obviously, it doesn't look good because your existing portfolios will be down maybe 5%, 10%. But when you're sure that after 10, 15 years, this is what the outcome is going to be, then these 1 year, 2 year, or 3 year of low performances, little bit negative performances should be an opportunity rather than a fear, right? So I think the long term story for India is intact. We are all estimating India's nominal growth to be 10%, 10 to 11% band.
Nominal.
And if that's the nominal growth, then maybe 12, 13% of earnings growth, it can culminate into 14, 15% of market growth over long term, right? So if you are a long term investor coming here to create a lot of wealth, then these are opportunities. But if you are a short term investor and looking at 1 year, 2 year allocations, then the strategy will be extremely different. I always believe in having a counter cyclical approach. So any asset class which goes through a downturn is where you have to become a buyer, right? So once these asset classes perform, if you're going to lap up on it, then you will go through a phase of underperformance and then back into performance, right? A lot of people piled onto gold and silver after gold and silver did 2x and 3x and 4x return, only to realize that in 2 days you lose 30-40% or 50%, right? So either you identify these opportunities early on, or then don't come after everything is played out. So certainly, like I told you in the beginning, India is the worst performing market. It's an opportunity. It's not to be worried about, right? So yeah, that is what I would say. I think we had a great 12-month window where one could have really participated, and all those who have put money are going to be very happy today.
Right. No, other thing is particularly what's happening in wealth management, Akhil, and I want to pick your mind there is, for example, if I'm the investor invested in a particular PMS, say Motilal, and let's say it would have underperformed for 1 year, and then another someone else, maybe his friend, neighbors are telling that my scheme has done better, and why don't you move from one to another? Do you think this approach is really sustainable in the long run?
It's not sustainable because let's say hypothetically this ex-investor has invested into a Motilal Oswal portfolio when our portfolios were on top, right? And so therefore maybe you've entered at the portfolio peak, and for some reason if the portfolio goes through a cycle of underperformance in the short term, which happens logically, then obviously you are fearful and you may be tempted to exit out. And then what one will do is then eventually buy into another performing product of current times,
Which is
and then that product also will go through. So in the process, this whole thesis behind the behavior gap of investors, which is where investor returns are lower than the investment returns, that theory comes in place. Because if you are going to buy only the tops of fund manager and you're going to sell the bottoms of the fund manager, then your returns will be substantially lower than the actual return of the fund manager, right? So think 100 times before you invest, before you cut a check, and once you have done that, then give a 10-year cycle. You have to be invested across good and bad cycle to then see that compounding of 13, 14, 15% over a longer term period, which means that your portfolio will compound 4 times, 5 times. I think that is the only way one can avoid doing mistakes of getting into wrong products, right products at the wrong time.
Right. This is very important, guys, because if you don't correct your behavior And if you keep shuffling your maybe mutual funds, AIF, PMS, then you're not going to get returns. What is more important is you have to have conviction. The way we look at it at a house level is that what is the kind of earnings the portfolio level has, and based on that you should look at what kind of stocks have been bought by the fund manager. Are they really high conviction ideas, maybe going through difficult time? Maybe that is the time you should take courage and put more money instead of redeeming it from there, because otherwise you'll keep doing this window shopping and not want to create returns. So